The chemical industry is renowned for going through consolidation waves, often driven by supply-demand imbalances and the opportunities to consolidate and create scale. If we look going forwards, one of the drivers which we think is understood and underplayed at the moment is the degree of debt refinancing that's going to be required in the industry. If we look at the industry has somewhere in the order, when we've analysed the top 200 companies, of 380 billion of debt on their balance sheets. And of that, the top 27 represent 170 billion. If we take the top 27, they have to refinance over 140 billion, or 80% of that, particularly in the next 5 years. So we see a hive of activity in terms of debt refinancing. Now, that's not unusual, it's a very high number, but the context to which this has to be done is slightly unusual, in that we've also seen in parallel to this a seismic change in the industry with the onset of North American shale gas, creating both low-cost methane, ethane and NGLs into the industry, which has created for the first time in a generation the opportunity of investment economics in North American commodity hydrocarbon chemical businesses. What does this mean? In the context of M&A, we see this as a significant catalyst. So we have on the one side a significant capacity increase in North America, and as has been historical in the chemical industry, typically we move into an oversupply mode that has an impact and creates low margin in the cycle. Trying to refinance at the same time as moving into a low margin cycle we see as the big challenge for the industry and a significant catalyst for M&A consolidation. Who do we expect to be the winners in this? Well, certainly those with strong balance sheets, and we've done a lot of analysis in this particular paper around what does a strong balance sheet mean and who are the players that we see being able to take advantage of that. And clearly having an asset base that is a asset base based on good feedstock positions or good assets within the markets that the North American products may target will be important. But most important of all, we've recognised that preemptive action will be required for many of the players. So really trying to address asset portfolios, trying to make refinancing ahead of the industry curve will be an essential part to create the winners going forwards.